When things get wild, gold prices are going to go up. Nothing goes straight up or straight down. There could be another $200 down on gold. Easily. When it flew up this fast, this high. But long term, we're bullish and we don't give financial advice. We give trend forecasts. Whose gold, if anyone, if in Fort Knox? Yeah. This is important because there is an opportunity. If that gold is in Fort Knox, they are going to say, we're raising the price of gold, just like they jacked it up 70% after they stole it from the people back in 1933. They gave them like $20 and 80 something cents or some cents an ounce. And as soon as they got it all, they increased the price to $35 an ounce. If they increase the price of gold 70%, it's $5,000 an ounce. They're going to say we have all this gold and now we just took care of our debt. So don't worry about it. Yeah. They're going to do something. And again,
in today's news recap, gold's meteoric rise pauses as investors consider profit-taking. Gold prices have experienced a remarkable upward trajectory since mid-December, culminating in a record high before showing signs of a pullback. The precious metal surged from $2,699.60 on December 18th to an all-time high of $2,974 yesterday, representing a 14.46% gain in just over 2 months. With the current rally approaching the magnitude of last year's advances, market participants have begun considering exit strategies. Commerzbank analysts noted in a recent report that apparently these investors consider the upside potential of gold to be exhausted and are therefore taking profits. They cited the latest CFTC commitments of traders' data as evidence, which showed managed money funds reducing gold long positions by nearly 12,000 contracts. Despite a substantial net long position exceeding 200,000 contracts remaining, this reduction signals potential exhaustion in gold's upward momentum. Market sentiment appears to reflect that gold had become overbought following its recent parabolic surge. However, today's price decline occurs against a backdrop of escalating trade tensions, as U.S. President Donald Trump announced plans to impose a 10% tariff on energy imports from Canada, along with a 25% levy on goods from both Canada and Mexico, America's two largest trading partners. These import taxes, combined with the existing 10% tariff on Chinese imports, are expected to hamper global economic growth and suppress demand. Analysts at Saxo Bank observed that safe haven demand remained strong amid tariff concerns. President Trump confirmed tariffs on Canadian and Mexican imports will proceed, keeping inflation and trade war risks in focus. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Going on to what's going on, you take a look at the markets today. The S&P fell 4 times in a row. Why? They say that the traders, the gamblers, they're worried about economic growth and the tariffs, the global trade issue. Let's see. NASDAQ dropped 1.35%. NVIDIA, boop, down 2.8%. Tomorrow, everybody's waiting. What's going to happen with NVIDIA when they release their earnings report for last quarter? And again, the whole DeepSeek is now out of the news. And as we keep saying, China's going to lead this trend in AI. Love it, hate it. And again, I hate the whole thing. But and I'd rather the United States lead it than China, but we call it like it is. So that's going to be a big thing, but we're still forecasting a dot-com bust. There's a lot of uncertainty in the markets in this new realm here under Trump. It was very positive in the beginning when he got elected. It hasn't looked so good now. And, it's the market took a leg lower after the most recent consumer confidence survey from the Consumer Conference Board came in much weaker than economic estimates. This follows a series of disappointing releases, this is CNBC, last week, including lackluster manufacturing and retail sales numbers. So, then you had Bitcoin. Boop. Bitcoin's taking a hit, man. Fell below $90,000. It's at a 3-month low. The flagship crypto is trading almost 20% below its all-time high, reached on President Donald Trump's inauguration day, and on and on. So here we go. Will he pay the guys that gave him almost $300 million in the crypto club to say something and do something that's going to jack the prices back up? Because that's what it's all about. And then you saw Brent crude, right? It fell nearly 2% today. It's around $73 a barrel because now they're saying there may be a mineral deal with Ukraine. That's the latest breaking news. So I got to hand it to Trump. The U.S. economy is shutting down rapidly. Expect widespread job losses with much higher inflation. An article came out showing how the rich, the top 10%, are driving the retail sector. Wrote about it extensively in this week's Trends Journal. And Moody's Analytics says the top 10% of earners now account for 49% of all spending, up from 36% 3 decades ago. And these 10 percenters, they account, you ready for this? 1/3 of the U.S. gross domestic product. And that goes into our article in much more detail in this week's Trends Journal. Leading U.S. economic indicators weakened as the year began. This is serious. Again, this is Slavelandia. It's a whole new game. The bigs own everything. And again, you see with Trump, again, I say what I say things only with the facts. You got a billionaire club in there, all right? As they say, if you're not a billionaire, shut your fucking mouth, you can't say anything. Here's the data. The middle class is shrinking, the rich are getting richer, and they're running the show. So, U.S. leading economic indicators, but going down a lot more. Look at the home prices. But sales are down, prices are up. Can't afford it? You got it. And then again, a whole load of trends on the global economic front. When the economy fails, jobs go with it. We've been doing so hundreds of weeks, so on and on, going out of business trends, one after another. They're barely reporting out there. Oh, and the big news they're making is that the European stocks are outperforming the U.S. stocks. They're nothing over there. And the EU, you got Germany, the 3rd largest, or some people say the 4th largest, depending on whose data you look at, economy in the world. They're a recession. The whole market thing is a rig. And the ECB, the European Central Bank, is going to do everything they can to lower interest rates, and so too will Donald Trump. 2013. And you could Google it up, and you could see it. Victoria Nuland boasted that Washington has invested $5 billion in non-governmental organizations in Ukraine for the purpose to, quote, teach democracy. They overthrew the government. So what Trump is doing, I'm all for it. And the taxes, the tariffs, I agree with them. They have it made in America. I'm all for it. But get away with the income tax, because when we had tariffs, we didn't have income tax. So if you're going to put tariffs in there, get rid of income tax.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.